10-minute deliveries. Only time is going to tell us if this is a sustainable model where all of you are getting used to getting everything from fruits, vegetables, dairy, electronics, mobile chargers, all in 10 minutes, or once this gush of liquidity is out, we'll have to get back to waiting for, same-day deliveries, or at least in a couple of hours. There's a new kid on the block, and I'm using the word kid very purposely. It is Zepto. It's a startup by two 19-year-olds, which is raising some serious big bucks and rewriting the rules of the game. It is, in fact, competing with Blinkit, called Grofers, backed by Zomato, Tiger Global. There are others also now looking at this 10-minute delivery model. Tatas are on the verge of doing it. Swiggy is in this business, as is Dunzo. Joining me now is the co-founder. He's all in 19. Aadit, thanks so much for joining us here. I believe you guys have got another big fact check. Tell us more about it.
Yeah, sure. It's wonderful to be here, and I appreciate the time. Very briefly on what we've achieved so far. I think since the last fundraise, we've raised an additional $100 million that we're announcing today. That $100 million comes at a $570 million valuation, and it's being led by Y Combinator, the continuity fund, which is sort of the growth arm there at Y Combinator. And yeah, we're super excited about what that entails. So 100 at 570 led by Y Combinator. That's sort of the long and short of it.
Why such quick back-to-back fundraisers, And I find it like, I'm going to be really honest here. Someone just older, I can't even remember what I was doing at the age of 19. And even if I do remember, I'm not going to say it on television. God forbid my parents are tuning in. But why such back-to-back quick fundraisers? And is your age ever a challenge to raise these big bucks?
So look, I think, very honestly speaking, since we've come out, unfortunately, there has been a focus on age, and that's really not, how Kevalia and I operate. Like, we don't tweet, we don't make much of a noise. We're just heads down executing. I think the bottom line for us is we prefer to leave it out in the field. And, as founders, we've grown incredibly personally as this company has grown as well. And, we're pretty excited just about the way we've executed, the way the team has been coming along. And, unfortunately, the team is not, just like a bunch of teenagers building this out. We do have, folks with decades of experience in supply chain and finance and marketing. I think, we're in a position where we've really gotten over the age thing for like quite a while. I know, it makes for interesting headlines, but at the end of the day, customer doesn't care, and that's all we care about. I think that's on that front. In terms of, the fundraising, very honestly speaking, at the end of the day, we've got sort of large, thoughtful investors like Y Combinator and the other people on our cap table. They've, for us, investors are consistently choosing to back us, because we've got sort of the best pure play execution out there. We're growing incredibly fast. We've built out one of the best leadership teams, at least I believe, in India today. And we've got some incredibly strong customer love for the product. And yeah, I think, right now, investors are just excited about all that. They haven't seen, execution as smoothly in this space before. So it hasn't been much of a challenge. I think at the end of the day, the only numbers we care about are sort of our metrics, and I'm sure investors sort of agree. I don't think the age has never been a factor for us, but fortunately it is a focus area for better or for worse.
Oh, yeah, I'm all for gender no bar, age no bar, but it's still really fascinating. I'm telling you, someone older, I wish I was even 50% of what you're doing at the age of 19. But having said that, I want to get back to your business model, which is this 10-minute delivery thing. Now, you've got serious capital backing you, and you are competing with some really big, serious players, whether it's a Zomato via Blinkit, whether it's the Tatas via BigBasket, which is going to launch, Google-backed Dunzo, the list goes on. So therefore, you're going to continue to need capital to build this up. What are you going to do when it's time to start giving the money back to all of these shareholders? Because you can't keep burning cash, right?
Yeah, so look, we're in a position where the reason why the fundraisers we've been able to achieve back to back, and the reason why this model has garnered so much excitement, like globally, is because of how solid the unit economics are, right? I think on a individual dark store level, individual order level, and we're already seeing sort of our mature dark stores trending towards full operating profitability, and that to us is incredibly exciting. We've even seen globally players have operated in this model for many years at a time, fully profitable. And so I think generally this model, the excitement around it is that there's a very clear path to profitability, and it's not like 5 years out after burning X billion dollars. Like we can, if we needed to on a unit level, we could get to profitable. Obviously, right now we're in a position where it is a front heavy cost business where there is a lot of upfront investment you need to make to expand sort of your footprint. And so in the short term, obviously there is going to be investment, there's going to be capex, there's going to be multiple other things that we need to focus on. But look, I think on a fundamental level, the business is growing incredibly fast from a revenue perspective, and on an individual dark store level, the core unit economics are strong. So we're not particularly worried about that. In terms of the competition, like I'll tell you very honestly, right? For us right now, we're in a position where we don't like talking talk, we like walking walk, and so we're in this position where we're executing extremely well. There's a lot of PR out there, and you'd obviously know much better than I will. I think we prefer sort of this to be played out between the supply chain and the ops team and the tech teams, not the PR teams. So we are in that position right now where we're not super worried about competition. Our thought process is keep executing, keep building sort of this product that customers are loving, keep growing as fast as possible, have those solid unit economics, and have the best team out there, and we'll be sorted. And I think 5-10 years from now, right, and that's the game we're playing. Right? We're playing a game 10 years from now. If you're talking to me 10 years from now, we won't be talking about how many players are in the Q-commerce space, right? We'll be talking about it the same way we talk about other mature markets like ride sharing and food delivery. So that's the game we're playing. I know for a fact that we'll be around 10 years from now. I hope you'll still be talking to me 10 years from now. But I can tell you I'll definitely be around.
I was talking to Albinder Jinsau, who started Grofers, which has pivoted to Blinkit now. He said each of the dark stores, the mini warehouses, they have to be within a 900 meters to a 1 kilometer radius. Do all of your quick commerce players work like that? Because then suddenly in a city, you're going to need many warehouses. You're going to need large fleets as well. How is this to be scaled up, given the overheads?
So, like for us, I think that's not how we operate. I think there's probably something that I haven't understood, and I'm sure there's a different approach out there that could work as well. But our approach is different, so it'd be difficult for me to comment specifically on that. What I will tell you is that our radiuses are longer, and I won't say sort of exactly what it is because I don't want people to start benchmarking against us, which is what ends up happening, for better or for worse. But yeah, I mean, our radiuses are longer, so the network that we have to build out to get full coverage is a lot more efficient. Right? One of the things that people don't focus on in this model is sort of the right network design and how you're able to cover the maximum amount of area with the least amount of footprint. So that's something that we focus on from day one, and I think that reflects in the radiuses, the quantum of dark stores we need in an area. You mentioned Gurgaon, and I think we've got an order of magnitude. Sort of a dark store count might be lower, but the coverage is an order of magnitude higher in terms of per dark store coverage. And so yeah, I think for us that network design is important. We don't have that problem of aggressive overheads to scale. In fact, capex and rent counterintuitively is not a huge line item on our P&L right now because of the amount of volume that each store can transact per day and like the throughput that it can handle. So those fixed costs end up becoming very small line items at scale. So yeah, I think not sure how to comment on that, but it's not something that we're currently dealing with.
Should consumers of quick commerce be prepared to pay more because you're getting something in 10 minutes in your own house at the press of a button? Is that part of the game? And will we see deep discounting also coming to quick commerce, you think?
Yeah, look, I think in terms of paying more, right, like I mentioned, the other misconception is that since people assume 10 minutes is a product in the market, the question becomes how many people will pay for 10-minute delivery, which is also like sort of like a false equivalency, right? For us right now, the counterintuitive reality is the faster you're delivering, the cheaper it gets, right? The more that you're delivering, like in a shorter period of time, the more orders each rider can do per hour and per day, And so your overall utilization per hour becomes, much higher than other hyperlocal companies because you're able to do, significantly more deliveries per rider, right? Because you're doing them in such a short succession. And so, yeah, I think the counterintuitive reality is that the faster you deliver, the cheaper it becomes. And our end state, amount that we need to charge, which we already started charging in our mature micro markets, but the end state amount that we need to charge is, significantly lower than, let's say, another hyperlocal player in food tech or in other markets, right? So, the way we look at it is in mature micro markets, people will end up having to pay significantly less to get a 10-minute delivery than to get, let's say, a 40-minute delivery. So that again is like sort of a false equivalency. People don't actually have to pay extra to get 10-minute delivery. 10-minute delivery in and of itself, the reason why this model is so exciting is because not only are you able to get such exciting SLAs, but your core unit economics are actually strong as well. So it's a flywheel. Like the faster you deliver, the better unit economics becomes, and you can see you keep capitalizing that until you end up at this 10-minute model. So that's sort of the flywheel of how global players have thought about it. That's how we've thought about it as well.
Okay, so let's see how quick commerce pans out over the next 10 years. We've been hearing from a Zomato to a Swiggy that this is not the future of just commerce, this is the future of Indian retail. This is the way Indian retail is going to shape up, where consumer behavior is changing forever. We want things super fast at the click of a button. So let's see how all of it pans out. Till then, here's wishing you and your entire team at Zepto all the very best and a very happy new year.
Thank you so much. Wonderful to be here.